My name is Gary. I'm the co-founder of Jasper Advocacy, and today we're doing this webinar with all of you. Thank you for giving your time on Thursday night, and I'll kick off. And please keep on giving your, if you have any questions or if you like what you hear, just keep on sharing your thoughts on the chat, and our team is monitoring it. So my name is Gary, and I've been joined by Bhavesh, who is the founder of Jasper Advocacy. And we have Gagan, who's our client success manager, and Kia, who's our executive assistant. So thank you for being here tonight. Before we dive in, quickly, thank you. 3 days ago, we sent the first invite for this session. And tonight, seeing so many people in this room that tell us one thing to us. You're feeling what we're feeling. So this budget, which just come out on 12th May, it shook a lot of people. And we are here because you want answers. You want, answers to your questions, not the noise. So here is what I promise you in the next 30 minutes. It's no fluff, no sales pitch. It's just going to be the playbook, what we use for our clients, and the same one, which keeping them calm while the rest of the market panics. Perfect. All right. So 6 days ago, on 12th May, the federal budget changed the rules of property investing in this country. So negative gearing on established residential properties, it's gone. So from 1st of July 2027, if you buy any existing home as an investment, you cannot offset your rental losses against your salary. That's it. So that was the strategy, a whole generation of Australian investors, which they built their wealth on. That's over. Now, look, I want to be careful here. If you already own a negative geared property, your grandfather, your existing properties are safe under the old rules. But every new purchase from here, it's a new game. So which leaves you with one question. What do I do now? Simple truth on this slide is cash flow isn't a want anymore, it's a need. So your property has to pay for itself from day one. And right now in this market, there is one strategy that reliably delivers that kind of cash flow. So if Airbnb done properly on the right property with the right team, it's just not an option anymore, it's the lifeline. And that's what me and Bhavesh are going to prove you tonight. So what we're going to do is I'm going to make a bold claim and I'll stand behind it. So the worst month on an Airbnb is still outperform the best month on a long-term lease. So what we call it, the worst case of Airbnb is still better than the best case scenario of a long-term rental. So it sounds like a big call, but it's not magic. It's a math. So long-term tenant pays you one rent every month, capped by what the market will bear for a 12-month lease. And an Airbnb property has multiple guests, multiple price points, dynamic pricing that flexes with the demand. So even on a quiet month, the gross income comfortably beats a long-term lease. But this is the part most people skip. This is only true if three things line up. That's the right property, right price, and the right team running it. So if you get any of those three things wrong, the whole model breaks. So if you get all three things right, you're sitting on an asset that prints cash flow from every single month. And we have we have testimonials, we have case studies to prove that. And that's the difference between speculation and a strategy. So we'll come back to these three boxes later in the session because that's where most investors lose. For now, let's hold on to this idea. Airbnb is the lifeline, and only if the fundamentals are in place. We move to the next slide. So diversified demand and predictable math. So two things people get wrong about Airbnb, and let me kill both right now. First, people think it's only tourism, school holidays, long weekends, summer peaks, but it's not. They are only picturing a beach house which just sits empty half the year, but that's not what our portfolio looks like. So if you look at on the left side of the screen of the slide, insurance companies booking displaced families after a house fire or a flood, corporate stays, contractors on a regional projects, locum doctors, mining and construction crews, families between homes where they sold one and they're building another. So they need somewhere to live for good 2 or 3 months. And of course, tourism is also part of it. So there are four different demand streams. Most of them are non-seasonal. They don't care about school holidays. If a pipe bursts in our own house, where are we gonna go? Insurance company gonna book us a next house down the road or in the same suburb. And the second thing most people get wrong is they think the math is fragile. So one bad month and the whole strategy collapses, which means if you don't have occupancy in 1 month, it's the strategy is no good. But wrong again. Look at the right size. We target 70% occupancy on your properties. So out of 365 days, we assume our property only going to be occupied 250 days a year. So the break even point where the property cover all its expensive and break even, that sits at 52 to 55%. And anything on the top is a bonus. So now this is diversified demand, predictable math, and this is how it works. Now let me show you how the numbers work. So these are the live bookings, which we have taken a screenshot from our portfolio. These are the 7 recent bookings across our portfolio, and I'll let you have a look. I'll let your eyes scan it for a second. Look at the guest type. A locum doctor in Hobart on an insurance claim, 34 nights, $5,100. Family flooded out of their home, 39 nights, just under $10,000. A business traveler in Sorel, 60 nights, $11,693 from a single booking. And it all up, these are 7 bookings just for the month of May and June, 236 nights out of our 7 properties. This is $54,000 of a revenue which is locked in. Now think about it. These are not back-to-back, 2-night holiday stays for the tourism. These are long, these are stable bookings, 20 to 60 nights at a time from an insurance client, business travelers, families. And that's the kind of demand which most investors don't even know exists. And this is the Airbnb advantage that me and Bhavesh talking about it. It's not tourism only. 40% is tourism, rest is diversified, real recurring demand that makes the cash flow predictable. Now, the next slide, I'm just going to share a case study. So this is the property which we bought last year for our investor. This is in Hobart, in a suburb called Claremont. So on the right side of the screen, you can see before and after. We bought this property off market, which means we didn't compete in public auction or we didn't pay the retail price. We sourced it directly. So we bought the property for $510,000. We put $20,000 for the furnishing, total in $530,000. Now, in 6 months' time, the current valuation of this property sits at $619,000. That's roughly $100,000 of equity from within 6 months. This is not chased, this is not waited, this is built in because the price was right. And on the income side, now this property is generating about $5,000 a month. Every month we've been paying this investor $5,000, $6,000 a month because this property stays booked. It's right in the middle of the suburb. The occupancy is sitting at about 75, 80%. This is what we mean when we say cash flow from day one, and we don't wait for the market to deliver. So we engineer the deal so the numbers work from the market the day we get the keys. And this is just one off. This is just the one case study which we prepared for this presentation, and we have plenty of case studies which we can show and show you how the number works. Now, what I'm going to do is I'm going to hand it over to Bhavesh. He's going to join from the same screen, and he's going to talk about how this strategy works and what we need to do it to make it a successful outcome. Over to you, Bhavesh.
Thank you. Thank you, Gary. Thank you, everyone. And thanks for your patience with the technical glitch. But yeah, let's jump to it. So Gary explained everything, which saw great bookings, the kind of great client results. But that's all good case scenario. That's all la di da, all best case scenario. What are the challenges behind it? Like, just to give you some perspective, there are 6,000 Airbnbs, 5,288 active as we speak in Tasmania. Do you reckon all the properties would deliver the similar sort of returns? No, it's not possible. So, what are the non negotiables behind to get the double digit rental yield and more than national average capital growth? So, the whole strategy runs on 3 pillars, which are non negotiable. One is buying the right property at the right price, and the most crucial one is managing it the right way, managing it professionally. So when we talk about buying the right property, what we are actually anticipating, what do we actually mean by that? kicking the emotion aside, looking at the logic, looking at the data, which is publicly available. So, what we look at real comparables of real live Airbnb listings so we can have a realistic forecast. Short stay regulations in the area, whether the council, whether the suburb is short term rental friendly, or whether there is tangible, predictable, and measurable demand over there. And we look at that council approval, short term rental friendly houses, like freestanding houses with a decent land component, because that's again non-negotiable for us when we're looking at the buying the right property. Second, buying it at the right price. So what I mean by that is there are, just like core logic and RP data, there are few software, comparative market analysis software, that gives us a perspective and a real time information about live Airbnbs in the market. So what we mean by buying it at the right price is, let's just say now we know, looking at the perspective, looking at the software, that X property is going to make us 70,000 on Airbnb based on live Airbnbs in the area. Similar four-bedroom, three-bathroom, which can occupy up to seven guests. Similar property in similar geographic location made an X amount this year. So based on that, you can have a realistic forecast, right? Now we know this X property that we are planning to buy is going to make $70,000 on Airbnb based on live Airbnbs in the market. Then we reverse engineer the price. We anticipate to buy it under 700,000 to make sure that there is 10 to 12% gross return mark that we are trying to achieve. Anything above that, the math goes like kicks out of the logic and doesn't make any sense. So we give it a pass. So this filter on its own, where we can get 10 to 12% gross return on Airbnb, is so big, like putting 100 properties through this filter, only selected three or four ticks the boxes. Then we move to a second layer of due diligence, another couple of them gets out of the box. So the ratio have been 1 is to 100 over last 2 years looking at the properties. So again, just to give some perspective here, looking at the slide here, you pay overpay 10% of the price based on the 10 to 12% return. The 10% gross goes down to 6 7, and after all the expenses the net returns comes down to 3 to 4. So it doesn't make any sense. The strategy is just like long term rental, it doesn't make any sense. Now, third and the most important one, which is managing it the right way, managing it professionally. So before we talk about like the managing, we need to understand who are we making it for. We need to position looking at the end customer. Who are we actually getting the Airbnb ready for? Whether it's tourists or holiday makers making booking a premium property and we can charge a premium pricing. That's one way to look at it. Second, we are making it for families to book for longer stays, making a family friendly Airbnb. That's a different strategy. Or we are making it fully equipped so that any insurance company's target audience would be the right Airbnb for the same. So first of all, we need to understand who are we making it for, then reverse engineering the furnishing and the positioning around it. So when I said it's the most crucial part, there are some fundamentals attached to it, like guest communication, pricing optimization, listing optimization, everything. So what I mean by that is our team, like not so there are a lot of facades involved in it. When we talk about pricing optimization, there are a number of AI tools that we use. When we talk about guest communication, there are tools which allows us to be 24/7 available for our guests. So that's that sort of service that you provide gives you five-star reviews. You build your credibility as a super host, and that's where the solid returns for our investor comes from. So, yeah, long story short, you need to make sure that you tick all three boxes, which is buying the right property at the right price and managing it right professionally so that we can achieve what we are trying to achieve. If we don't tick one of the three boxes, the whole strategy goes to drain. Next slide, please. Yeah. Now we are mixing this Airbnb cash flow, leveraging short term rental with Hobart for capital growth. Airbnb cash flow is cherry on the cake. The number one priority is capital appreciation and equity, so that we can leverage that to increase our portfolio based on where you are in your investment journey. So why we are bullish on Hobart? So why we are buying in Hobart, for the reasons I'm going to be explaining it to you in a bit more detail, and looking at the Airbnb comparable. So we are getting best of both the worlds. There's cash flow leveraging Airbnb and buying in a growth suburb for capital growth. Why we are bullish about Hobart? Vacancy rate is 0.3%. So I know there are a lot of buyers agents in here who live and breathe data, but for someone who like, just to give some context, for someone who is not related or not completely into property research, vacancy rate is basically, in a nutshell, number of properties available in the market for rental, compared based on divided by all the properties in the suburb into 100. So what basically 0.1 to 2% is considered healthy, so that gives enough confidence for an investor to invest. 0.3% is structurally tight. So that's why we are bullish around it. The rental vacancy rate is 0.3%, deadly low. Long term rental yield sitting at 4.5 5%. So without compromising, without adding a short term stay. So it gives us a good fundamental. There is a three Government has already spent $330 million on the Hobart Airport upgrade. So we are anticipating direct international flights from Hong Kong and Singapore to come directly into Hobart by this year end. So there is only one international flight, that is Auckland, New Zealand to Hobart, that comes now. And imagine what's going to happen when we have direct flights from Hong Kong and Singapore, which is, again, to give some perspective again, a lot of high paying customers come from Hong Kong and Singapore in the month of May and June, which is quite, it's cold in Tassie, so basically low month, but the calendar is booked out by foreign travelers throughout all our Airbnbs, looking at our 4 years of hosting history. So we are very bullish on this. There's a $1.2 billion stadium coming up, which is going to require short-term rental accommodation for 4,000 workers around that, and 900 jobs after the stadium is complete. And I'm not sure whether a lot of audience here been to Hobart, but there are not a lot of hotels out there to fill the demand for short-term rental accommodation. The migration is positive. The demand and supply imbalance is already there. It's increasing at an increasing rate, and most importantly, being island geographical region, there are logistical issues. Unlike Melbourne, Sydney, Brisbane, you can't go and make a lot of houses all together. Being an island, there are logistical issues, and that's where the demand supply imbalance is not going to be filled out anytime soon. So that's the reason we are very bullish on the capital growth side about Hobart. Now mixing it with Airbnb, so we're getting cash flow plus capital growth, that is growth through residential assets and delivering commercial returns, leveraging Airbnb, having and running it like a hospitality business. Now, again, what we talked about, we have got a full-fledged team behind what we are doing, and looking at the reviews, you can understand that this is where it's honest reviews from our clients who have bought two, three, and we have got clients who have bought four properties to us as well. So again, we're talking about the team. We are not playing tennis, we are not playing table tennis, we are playing cricket. It's a team sport. This is the whole team behind the outcome, the results that we are delivering for our clients. We have got teams in Philippines, India, Hobart, and Melbourne, all working for the same goal, that is best return on investment for our investors. Now, again, if you feel that this would be valuable for where you are in your investment journey to add something to your portfolio, reach out to us. And any questions, let's mic to you, audience. And Gary, I will mic to you. I'll ask you to take over from here. Thanks.
Perfect, perfect. No, thank you, Bhavish. So yes, now the chat function is on. We've done our part of the presentation. So we've delivered what we've been doing in last 12 months in Tassie, and layering it up with the Airbnb part. Now over to you, audience. If you have any questions, please put it out in the chat, and I'll take the questions, and we'll go from there. Perfect, perfect. Thanks, Rohit. Our property management fee is 18.7%, inclusive GST. Thank you. Uh, Sach, can you please show us example of cash flow just to get an understanding of incoming and outgoings? So look at this way, Sach. If your property makes about $70,000 a year, you take out 18.7% of the management. 10% is your cleaning fee from the revenue, and then you're looking at $200 a month for the utilities, and after that, you net on a $70,000 gross income about $50,000 into your bank account, and then you pay your mortgage, your bank repayments, your council rates, your water rates. So just as standard as long term. Insurance is a good question. So insurance is about $700 extra. It's like typically landlord insurance. So you can buy it from Terry Share. It costs you about $700, and you're covered for $70,000 content. And another thing from the Airbnb side, they provide 3 million USD insurance for any damages to your house. So it is called as air cover. But we still recommend our investors to buy another insurance, which is called landlord holiday rental insurance. Thanks, guys, for the session. How does the bank lend for the second property post the first one? Not really, Harry. Look, I've got three properties of mine on Airbnb, and every time I went to the bank, I've just taken a long-term rental appraisal from the real estate agent, and it worked for me. And once you are one year in the game, once you have 1 year returns, then the bank can consider that as well. Would you manage anywhere? Would you do it only for the ones? But that's a really good question, Naveen. Look, we are buyer's agent, so that's our core value. That's our core job. So we only buy properties. We only manage properties which we buy for our investors. And again, we will never say no. But yeah, our first preference is we only manage with what we promise, and we only manage the properties which we buy for our investors with all the due diligence and data research. Nidhi, I heard you look at properties with future development scope. Would your team assist with dealing with the councils? Very nice question, Nidhi. Yes. So our strategy is end to end. What we do is, we buy it strategically. So we buy a land where we can add a granny flat, or we can do a subdivision or a starter titled subdivision in a year's time, 2 years time, and we take care of everything. So you do what you're good at in your day job, and our team takes care of it. So we've got architect as the subcontractors, we've got builders, we've got town planners and the surveyors. So we take care of all the strategy. Yes, that's right, Rohit. So 18.7 is the management, and then 10% is what goes to the cleaning, and cleaning is paid by the customer, and then the rest is for the utility. We've got, if you go to our website, Rohit, on jasperadvocacy.com, there is a calculator, so you can punch in all the numbers, and that'll give you the results as well. Sach, we are responsible for managing the property. So what we have a buyer's advocacy, which is a Jasper advocacy, where we get clients on board, we buy them the right asset and the right property, and then we have a management company which manages like any rental management or any short-term rental management company. So we take care of everything. You are hands off. You don't have to anything. You only, as an investor, get paid third of each month. Aishwarya, if this is the first property, that's Aishwarya. That's a question for mortgage broker. I'm sure you can borrow at 5% or 10%. It needs to. I think that's more of a mortgage broker question. So I'll park over there. Nirav, yes, we charge buyer's agents fees. Yes, it's very standard. Nirav, it's anything that is industry standard, which is 15,400. Ignoring the current budget changes, CGT discount related differently. I haven't heard it. Otherwise, Rohit, no changes as of yet. It's considered as a residential investment, and we only run it on an Airbnb. That's only the difference. But technically, you're still buying a residential asset, but you are getting a commercial returns. Have how far in relation to cash flow so far from your experience? What has been the worst performing? Has there been any properties that in? No, and we are very confident about that. That's why I said in my presentation, the worst case scenario of Airbnb is still better than the best case scenario for long term rental. So as a minimum, the property makes about $3,000, $4,000, which is more than a long term rental. So look at this way, if you get two bookings at a $400 a night, and if you get, if it gets booked half a month at a 50% occupancy, that's still better than the long term. How can I connect with you guys for a more personalized discussion? Akshat, you will get an email after this meeting, after this webinar. So there'll be a calendar link. So you book a call and you connect with us, and we'll be more than happy to take the discussion forward. Yes, Nirav, we bought five properties under the SMSF, and it works really well. So you can't do much renovation or subdivision under the SMSF, but the best part is under SMSF because the interest rates are high. So this is a really good strategy. We buy you the clean property on the right street in a right suburb, and we run it on an Airbnb. How much for renovate a house and how much for setup? Renovation, it depends on the scope of works. Whether it's painting, flooring, etc. It depends on what's the scope of works. And furnishing a three-bedroom house, you're looking at about $20,000. What structure usually people buy Airbnb property? Most of our investors, Rohit, they are buying it under companies or previously under the trust. I haven't seen many come through the personal names. So yeah, so because it's positively geared, so that's really good for them. Will you provide all invoice for setup and co-hosting? Absolutely. So our team takes care of all the invoices, how we furnish. Our team on ground, they buy some stuff, secondhand from the marketplace. So you get a detail and a full transparency on a spreadsheet and a general ledger of from the zero. Sala, yeah, at this stage, yes, we are only doing it in Hobart because we are a lean team. We are a small business, and we are focused on we focus in Hobart. I have lived in Hobart for 10 years personally, so I know the place really well. We are only focused in Hobart or Tasmania. Yeah. Nidhi, with the recent budget announcement, land and build would still be eligible for negative gearing. Yes, that's exactly right, Nidhi. So we've been building 20 brand new houses next year, in next financial year. So that's currently going through the settlement and through the council's DA. So we are building brand new houses right next to the waterfront, which we call it Airbnb turnkey investment. So happy to talk to you if you want to reach out one-to-one as well. Would you say properties within 10 minutes of Hobart CBD are more likely to have lower vacancy rates? No, Bav, I wouldn't say that. CBD is always, it gets filled out first. But again, that's where, the data, the research, the due diligence, how we look at properties, the tools we use, the comparables in the market, that's where it comes in the picture. And our first and foremost important thing for us is the capital growth. There are no compromises on the capital growth. And the next is cherry on the top is Airbnb. If we buy through SMSF and it's Airbnb, does that go on our income? No, Bobby. It'll be paid to your SMSF account, just like any long-term rental. You talked about dynamic, fair, algo, and 24/7 support for clients. Is this something your team manages? Absolutely, Sach. So we got a team in Philippines who manage the guest communication. We got a pricing tools we use for dynamic pricing, which keeps a tab on how the pricing needs to be worked, and then we optimize the listing every single day. Midway point, Rohit, if it's regarding a new build, we're doing in Sorel, suburb called Sorel, which is 10 minutes, which is next suburb to Midway Point. No worries, Nidhi. How much these brand new house and land packages do we discuss in a private session? I would suggest, Sunirav, that would be ideal. But you're looking at about $800,000 all in. I think there is a restriction that you cannot do Airbnb. No, Rohit, I haven't heard it. They just say it needs to be compliant, and we provide all the invoices, all the returns. There are some rules and restrictions that you can't use it for yourself. But yeah, we bought like 5 properties under SMSF. It's working really well. No worries, Sach. What budget should one keep? close to CBD, if you look at the median price for Hobart, you're looking at about 1 million. So I wouldn't go close to CBD, Bhav. I would stick to anywhere within 20 to 25 kilometer radius of Hobart, or any capital city, or any Launceston, Burnie, Devonport. How much minimum invested? Look, anything between 600 to $700,000 is a really good spot for us, and anything above that, it's we'll come back with the value add opportunities, whether it's subdivision, granny. So yeah, 600, 700 is a good starting point. Perfect. So many questions. Loved it. No, it's good. And just to give you a background, guys, look, I started this. So Bhavesh is the founder of this business, and I started him as a client. He helped me, buying this property in Melbourne, and that's my third investment along with my wife. And today I have three properties, investment properties. They all are on Airbnb, and my yearly revenue is $240,000. So I'm not even relying on the capital growth of side of things, which is still doing good. So my two investments are in Hobart and one in Melbourne, and that's how I managed to leave my job and run this business full time from last 12 months. Yes, Pav, absolutely, absolutely. It can work in Victoria Regional as well. Again, you need the right people and right team by your side who pick the right asset for you at the right place where the demand is going to be, and that will work from capital growth side of things and also from the cash flow perspective. But yes, Victoria Regional is good as well, for an Airbnb. Very nice questions. What sort of stuff you do in management? Monica, everything from end to end. Your guest management, pricing optimization, dynamic pricing, management of cleaners. So you've got people management, hospitality, customer service, technology, compliances, everything. Do you have Airbnb in regional Victoria or New South Wales? Not at this stage. We got few properties in Melbourne Metro, but we don't have anything in Victoria. I wouldn't invest anything in Victoria right now, the way the market is. So staying away from it. Sila, do you negotiate the property? Of course we do. That's what you pay us for. So we do the due diligence, we check the bank valuation and all that, all the due diligence, and then we put a price on the property. And if you get that property within that price, it's good. If we don't, we keep the emotions aside so we don't overpay for it. Uh, Bobby, is Devonport better to invest in than Surreal? Look, I am very bullish on Surreal. I have got an investment going on in Surreal. Surreal is a very, very good suburb. Reason I say this, it's only 10 kilometers from Hobart. It's got a new school coming, a Catholic school. The infrastructure investment, they're doubling the bridge from 2 lane to 4 lane. So I'm very bullish about Surreal. How much would roughly be my furnishing expense to make it Airbnb ready? $20,000 would get it done, and that's only, I think that's only us and our team. I don't know how much other people charge, but 20,000 is what you get from your knives and forks to your couches and to your TVs and table tennis and everything. Main issue, if property get damaged, then no money for few months. That's not right, Monica. So there are mitigation plans in place. So what we do is we take insurance. So that's if your property gets damaged and it's not rentable, you covered from that side. And also Airbnb, as I said, they give you a 3 million USD insurance worth from their end. Do you guys have stock or you source after engagement? We source after engagement. We do get some off-market properties here and there because we sit and we do this every day of the week. So we do get some off-market, which is kind of a stock. But basically, we take your brief. What are you after? What are you trying to achieve? And then we go out to the market. At the moment, PR based on Tassie, but once they stop PR, then what vacancy rate will increase? I don't think so. So the population of the island is about 550,000, and if you put another 5,000 people, it just changes everything. And the PR is not going to stop. The migration at this stage in whole Australia is not that great. But if you look at the demand versus supply, Monica, in Hobart, there is a big imbalance. There are not enough houses. There are so many people on the waiting list from the homes Tasmania, from the government side, and people are not able to find rental that easily. The vacancy rate is 0.3%. So that's something not going to get solved easily. If a resident damages the content like bed, sofa, etc., who would cover the cost to repair, replace? Do you go to Airbnb? Yes. So the first thing you do is, that's why you need a right team by your side, and you need right systems and processes. So what a cleaners does is, when they go to the property to clean, they take photos, and when they finish, they take photos. So that's an evidence for Airbnb or for any management, any platform. So yes, Airbnb will cover it, and worst case worst, if they don't cover it, we'll back it up with the insurance, which we take it as a third party insurance. How much is your charges? We happy to discuss one on one with you, Monica. There are two different charges, but happy to have a discussion. Does Airbnb take bond? No, they don't. They don't take bond. BAF. Yeah, so they give us 3 million USD insurance basically. And I just want to show. I'm just going to go back to the screen. This is what I wanted to share with most of you, which you may not have an idea about, because you might think Airbnb is all about tourism, but we have picked these. So we've, at this stage in our portfolio, we got 20 Airbnbs which we've been managing, and these all are the bookings. If you go one by one, this is the only month. This is only in the month of May. So there are people who are staying it for 24 nights, 30 nights, 60 nights, and they're paying. Their insurance companies are paying. Their work people are paying. This is something people get amazed when they see the returns like this. A very good question, Manoj. So we advertise it so on marketplace like Airbnb, Booking.com, Stays, VRBO, and then we run our direct booking website, ad on Facebook and Instagram, and on Google, like $50 or $100 a day for direct bookings, and a Google Vacation Rentals. So we list it on all the platforms. Good question, Bhav. You going into the technicality of things on the operations management. Yeah, look, it depends. Three to 4 hours. Sometimes 2 hours if there are only like one room use. Yeah, on an average, you say 3 hours. So basically, customer checks out at 10 o'clock, and then our cleaners go in at the same time at 10:30, and then they'll finish, and then the next booking will come at 3 p.m. Pretty standard like hotels. Cleaning cost is something, we add it on the top of the nightly charge. So that's paid by the customer. That's not your revenue. That's not our revenue. So our management is only on the revenue which you make, or not on the cleaning. So cleaning is separate. We can look at it, Manoj. Look, again, it's not our priority. We don't want to take on something that we can't make it work. That's what we focus on. So our focus is exists helping our clients, making them what we promise, and the reason they got onboarded with us. But again, we can look at it. Look, if it's in a right position, you can reach out, share your address, and we can look into it. But our value proposition is the way we model our business is, we buy the right property, we set it right, we design it, we furnish it, and then we operate it end to end. Good question, Harry. Yes, you only have with us again, as on the management side of things, you only have a 6 month running contract with us. So at any point of time you want to exit, you're more than welcome to. You just have to give us 6 months notice, so that we don't take any forward bookings. Because if you cancel it, there are penalties, or else you can get out of it by paying the Airbnb or the platform penalties. How does the door lock work? Again, that's the operations side of things. I can talk all day about it, or I can get my team, my property manager. Yeah, digital locks, the lock keypad with the numbers, pretty stock standard. How long did it take you to get your 3 properties for the 240K? Not long. Look, how I started this business with Bhavesh is, I moved out of Hobart to Melbourne, and I said, look, if I put this property on a long-term rental, it's not going to cover the mortgage. I bought the property for $815,000. Beautiful property, water views, and good property. I said, let's give it a go on Airbnb. So the first year that property, Bobby, sorry, Bev, that Bobby, that made me $97,000. And rest is the history. Then I converted the garage at the back, 42 square meter, into a one bedroom granny flat. Now, whole property can have up to 12 people in that house. And that property is now set to make $140,000 a year, which is on $1 million investment. It's 14% rental returns. And then I have another one which I renovated, and then I have another one in Melbourne. So yes, 2 years. Airbnb service fee, Manoj, yeah, they charge about, I think, 17%, but yeah, we only call our revenue which comes to our bank account. So yeah, that's their fee. When you team co-host, I'll be host as well. No, it'll be us. So we'll be hosting the team. We'll be hosting your property, but you will get all the access. How's your property going? How many days it's getting booked, etc. You'll have access to a tool. Do you guys ensure the properties you source are not in public housing? Absolutely, absolutely. That's the most important thing. That's the fundamental of buying the property, doing the due diligence. Making sure, and our model won't even work in this sort of area where it's low socioeconomic and all that. So that's the fundamental part of the buyer's agency. What I want to do, let's chat. Thank you. Perfect, perfect. How are the results? Oh, perfect. Very nice question, Nidhi. We have bought 45 properties in last 12 months in Tassie. The minimum growth they're sitting on is 17.5%. That's the minimum. And I'm not even adding the value add, or I'm not even talking about a granny flat, strata, or anything. And they're not paying anything out of the pocket. And that's what I said at the start. When the budget came out, me and Bhavesh and our team, we didn't get any phone call from our investors because they have seen the results in the last, 8 to 12 months. Um, yeah. So yes, that's Manoj. Again, the due diligence. Gold Coast is a different beast. It's all together. It's a party place. Tassie, we get a lot of tourist customer, which are families, and then it's topped up by corporate travelers, insurance customers. So we don't get many party customers. They just come in and they just leave early in the morning, come back in the night. So it's pretty good for us. No, Monica, Tassie is just getting started. Tassie, there was a peak during the COVID time, and then it fell back about 10%. Now it's picking up again, and it's still, the stock is very much cheap compared to other part of Australia. You're getting like a big land of 700, 800 square meter within $700,000. Uh, that's 3 bed, 2 bath, or 3 bed, 1 bath. So that's pretty good. Yeah, no, Tassie is not on high price. I would just disagree there. How much we need to invest in SMSF? Again, Raman, it's you need to check with your broker what's your borrowing capacity looks like, how much you have, how much you have in your SMSF. Wow, wow, Monica, that's a great buy. That's a great purchase. Yeah, there's still a lot of room. Yeah. Sach, do you prefer new builds over older houses? Sach, no. Look, again, the case study. I'll just take you to the back. This one. So we bought it for $510,000. This house is 1952. So there's no preference. It's again, it depends on the budget. It depends on how much we can invest and what is exactly we want. So no one was touching this house. So we bought it for $510,000, 1950s house, and it stays booked all the time. So yeah, it depends on the brief. Great questions, guys. Very, loving the questions. Uh, Keep it going. We still got how much time we left? We still got 8 minutes. Yes. That's exactly right. That's exactly right, Bev. So what happens is when you work, all day, every day, 5 days a week or 6 days a week in the market, so you make a relationship. So for example, let's say if I'm the real estate agent and if I know Gary's the buyer's agent, he's got client, they're going to be so confident going to the vendors and say, hey, if you want to sell your house, I can sell it within a week because I've got a bias. So that's how it works. So they sell us, they send us these off market deals. We do our due diligence. If the numbers stack up, we put it in front of our clients. If they make a move, that's how we source off market. With the new builds, do you help with the setup of depreciation or just tax man? Uh, Look, that's again something we can refer you to a specialist, but this is not something within our scope of works. But yes, having being in the business, we can definitely refer you to a specialist. Did you have to do renovation for this one? The 20K price point is just for setting up for a house and renovations. Good point, Sach. So for this one, 20K is only for the furnishing. And if you have to do the renovation, we've got a dedicated team. So you don't have to go and get 10 different quotes. We'll get the quotes for you. We'll design what's the scope of work's going to look like, and we will manage the renovation. So that's something we do as well as part of our end to end. Thank you, Sach. And so sorry, guys. I wanted Bhavesh to be here as well so that he could answer some of the questions, but it's just a technology. It's sometimes it's not your best friend. Rahul, as a foreign investor looking to invest in Australia, would it be allowed to rent the property out on Airbnb or other short-term rental? Uh, yes, Rahul, it's possible if you got a good cash. You have to pay the foreign stamp duty, foreign FIRB, I think they call it, which is about 12.5%. If you happy to fork out that much money, then you can definitely have a piece of land in Australia, and you can do that. What do you use if you renovate, just contractors or the same team? Same team. So we've got dedicated contractors who just work for us because we've given them so much work, day in day out. So they know what we are doing. Whether it's flooring, whether it's painting, new kitchen, new bathroom, they just go in and they just get the job done. I think it's about 12%. Rahul, don't count me on that. Please check. I think it's about 12%. Once the renovation is done, yes, look, we only touch Monica mostly cosmetic renovations, and if we make much changes in bathrooms or plumbing or electricals, 100% you will get all the certifications, all the council required documents. But mostly we just touch like carpet, painting, new doors, maybe some kitchen door handles, new appliances to make the property look habitable and yeah. My God, so many questions, guys, but I love it. Love it. Keep them coming. We got another 3 minutes. If there are any burning questions, terms of build quality, I noticed man is built around 1950s and is still standing strong today. Would you say, structurally speaking, brick houses are generally better quality, lower maintenance? Again, this is debatable. I agree to the extent. Old houses are still they've got good bones. They've got good bones, and as the building cost is getting expensive and expensive because of war, inflation, petrol prices, or whatever happening in the world right now. That's where the different materials started coming up, where you can build better or cheap. Uh, yeah, I wouldn't disagree with you. I would say the old houses are still standing strong, as you said. Yes, because the one that's on screen is more of a cladding sort of house. It's not a brick house, but it's still looking good. We did the building inspection. We didn't pick much. There was some issues in the bathroom, and hence we negotiated another $10,000 on the purchase. So it was actually for 520, and that's what we spent putting a new vanity and tidying up the bathroom. No, great. Yes, yes. So if you just look us online, search for Jasper Advocacy on Google you will see all our Google reviews. And if you just go to Bhavesh Instagram, there are a lot of testimonial videos which you can see where clients are just speaking out their heart. So yes, have a look. Water hemorrhage plumbing fixations. Can you please elaborate a bit more? What exactly water hemorrhage plumbing fixations have? 600 is a good price point, Raman. Again, we ask our client give us a leeway between 600, 700, 800, and then if that's your budget, we'll bring a quality deal on the table, which will have upside value in the coming years, and it will deliver strong returns from you day one. So yeah, so that's the price point. Sorry, that's a bit more technical. I have no clue about it. Haven't come across this yet. Uh, Raman, like our buyer's agency fee is pretty standard. We can have a one-on-one discussion, but anything between, what the buyer's agents charge. So book a session. Let's have a call, and we can go through it. But to answer your question, yes, it's 15,400 for the buyer's advocacy. But we take care of. All right, guys. Thank you so much. It's been amazing. Thank you for giving your time, and I hope it's really worth your time, and you've managed to get out what you wanted to get out. Great numbers. We only sent this invite like 3 days ago, and having like 30 plus people on this Thursday night, it's amazing. Again, I'll sum it up. I'll summarize it. We buy the right investment, looking at the capital growth or the long term growth, and then we design the property, we furnish the property, and we manage end to end. As an investor, you just sit and you just do what you do, and we take care of everything else. So thank you very much. Great to have you. And yeah, reach out. You'll get us an email from us. You'll get a phone call from us. Reach out to us, and then we'll have that one-on-one session. Thank you very much. Cheers.